Hey everyone, welcome back to the Violet Vault. Let's talk about something we all pay for, but probably hate thinking about. Insurance. You write that check every single month, or it just disappears from your bank account. And for what? Well, for peace of mind. But if you're a safe driver, if your house doesn't burn down, that money is just gone. Poof, forever. It feels like you're paying into a system where the only way to win is to have something bad happen. It's kind of crazy, right? Well, what if I told you there's a way to completely flip that script on its head? Today, we're going to dive into how you can stop being just a customer and start acting like the house. Let's get into it.
You know, the entire magic trick behind the insurance industry was laid out perfectly by the master himself, Warren Buffett. He calls it the float, and it's so simple, it's brilliant. It's all the money, your money, that they collect in premiums and then just get to hang on to before they ever have to pay out a claim. And as he says right here, they get to invest this giant pile of cash for their benefit. Not yours, theirs. That's the secret sauce.
So let's just let this one sink in for a second. From a purely financial perspective, every single year you don't file a claim, that premium you paid is a 100% loss. Now I get it, you're buying protection, but the cash itself, it's gone. It's revenue for the insurance company. It's an expense for you that has zero financial return. It just vanishes into their system.
Okay, so let's pull back the curtain and really understand how this game is played. Because once you understand the power of this float, you'll see exactly how the big guys make their money, and more importantly, how you can start to change your role in this whole system. So what's really happening here? This float, it's literally your premium payments, sitting in a massive account. The insurance company gets to use this huge pile of cash, essentially free money, to invest in stocks, bonds, you name it. You are effectively giving them a giant zero-interest loan, and they're using it to generate even more profits for themselves.
And if you want to see just how profitable this can be, take a look at a field like workers' compensation insurance. It's pretty much a 50% margin business. Now, what does that mean? It means for every $1 million a company collects in premiums, they fully expect to pay out only about half of that in claims. The other $500,000, that's their profit and their float to go play with in the market. That is an incredible business model.
And this, right here, this is the fundamental conflict of interest, isn't it? The entire structure is designed to benefit their stockholders. The massive profits they make from investing your premium dollars go straight to them. It doesn't come back to you, the person who actually provided the money in the first place. You're funding their party, but you're not invited.
Okay, so we've laid out the problem. It can feel a little bit depressing, right? Like the system's rigged. But what if there's another way? This is where everything changes. This is where we stop being just the payer and we learn how to become the player. It's time to flip the entire model.
This is the big idea. This is the mental shift I want you to make today. Instead of just passively handing over your hard-earned money for protection, you can actually get on the other side of the table. You can participate in the system and earn the rewards that, until now, have been locked away for the giant corporations.
And this chart just makes it crystal clear. Look at the left side. The old way, you pay a big, faceless company. They take your money, they invest the float, and they keep all the profits. Simple. Now, look at the right, the new model. You pool your premiums with a community of people just like you. The community invests the float, and the profits, they stay right there with you and the community. You see the difference? It's a game changer.
So you're probably asking, okay, that sounds great, but how does this actually work in the real world? Well, there are two main ways this is happening. For bigger businesses, there's something called captive insurance. They literally create their own private insurance company. But for most of us, the really exciting path is peer-to-peer or P2P insurance pools. This is where regular people with similar risks, say a group of freelance photographers insuring their gear, can band together and basically insure each other.
All right, I can hear the big question already. Wait a minute, do you want me to pool my money with a bunch of strangers on the internet? How on earth do I trust them to pay me if I have a claim? That is the perfect question. And the answer is incredible. You don't have to trust them. You trust the code. This is where technology gets really, really cool.
The engine that makes all of this possible is called a smart contract. The best way to think about it is like a super smart digital vending machine. All the rules of the insurance policy, what's covered, what proof you need for a claim, how the payout works, it's all pre-programmed into the code. And when the conditions are met, boom, it executes automatically. There's no middleman, no, let me check with my manager, no delays, it just works.
And this is the key to the whole system. The smart contract is the rule book. And because it lives on a blockchain, that rulebook is transparent for everyone to see, and it's unchangeable. No one can go in later and secretly change the terms on you. This creates a system of trust that's based on math and code, not on a company's promise. It's fair, it's transparent, and it's powerful.
So, this technology is powering a whole new financial universe called decentralized finance, or DeFi. You can think of it as a parallel financial system being built on the blockchain without all the traditional banks and middlemen. And inside this new world, you get to have an incredible amount of control over how you manage risk and what kind of reward you're aiming for.
This is not a one-size-fits-all deal. Inside these insurance pools, you can actually decide what your risk appetite is. Imagine you and your friends are starting a business. One friend might say, "Look, I just want my money back plus a little extra. I can't stomach a lot of risk." Another friend might say, "You know what? I'll take the first hit if we lose money. But if this thing takes off, I want a bigger piece of the profits." DeFi allows you to create these exact kinds of arrangements with your money. It's a method called risk tranching.
So let's look at the menu of options here. You can choose to put your money in what's called the senior tranche. Think of this as the conservative, play-it-safe option. You have top priority, you get paid first, it's lower risk, and your return is more predictable. Then, you have the junior tranche. This is the go big or go home option. You agree to absorb any losses first, which makes it much higher risk. But the flip side? Your potential returns are amplified. They can be way, way higher. You get to choose your own adventure.
Now, I know this might sound like some crazy science fiction stuff, but this is happening right now. These are real platforms managing billions of dollars in value. Take Nexus Mutual, for example. It allows people in the crypto world to buy coverage against things like a smart contract getting hacked. And it's all powered by these decentralized pools of capital that we've been talking about. This isn't a theory, it's a real, functioning market.
So, when you put all of these pieces together, the float, the community pools, the smart contracts, the ability to choose your own risk, what do you get? You get a complete and total shift in your mindset. It's about moving from being just another player at the casino table to actually becoming the house.
And really, this approach to insurance is just one part of a much bigger strategy for building a truly resilient financial life. It's about developing skills that can earn you an income anywhere in the world. It's about not having all your eggs in one basket, whether that's one country or one legal system. And most importantly, it's about reducing your dependence on any single point of failure, be it a government, a bank, or a traditional insurance giant.
And that's the bottom line. This is the core takeaway for today. In this new world, protection is no longer just an expense that you throw away month after month. It becomes an asset. It becomes an investment where you deploy your capital to protect yourself and your community, and you can earn a return for taking on that calculated risk.
So I want to leave you with this one question. After everything we've talked about today, in this new financial world that's being built, are you going to be content to just keep paying the premiums? Or are you ready to start thinking about how you can become the house? The choice, more and more, is becoming yours. Let me know your biggest takeaway in the comments below. I'd love to hear your thoughts.
Wow, that was something, right? But don't go anywhere, there's more coming, and it's gonna make you think in a whole new way. Quick reminder, if you like learning cool stuff without the fluff, subscribe now. You won't regret it.
All right, let's jump right in. We all see the crazy headlines, right? Stocks like Nvidia are soaring, making a few people an absolute fortune. But what if I told you the single best investment you could make isn't some flashy tech stock, but the coffee shop on your corner? Today, we are pulling back the curtain on a super powerful strategy that most people overlook, the neighborhood syndicate.
From the day we start thinking about money, we're taught that wealth means owning stocks, these little digital pieces of huge, faceless corporations. Well, today, we're going to flip that entire script on its head. We're going to compare the world of Wall Street with the world of Main Street. The digital blip of a tech stock versus the real, tangible, cash-generating power of that laundromat you drive by every single day.
So let's talk about the big problem. What's the real risk of putting all of our trust and all of our money into the stock market? I like to call it the Wall Street mirage. From a distance, it looks like a solid, shimmering oasis of wealth. But as a lot of us know, you get too close, and poof, it can all disappear. I mean, really think about it for a second. What is your stock portfolio? It's a number on a screen, right? It goes up, it goes down, it kind of feels like a video game, a simulation of wealth. A CEO you'll never meet makes a bad call, or some panic happens on the other side of the planet, and a huge chunk of your net worth can just evaporate. It's not connected to anything you can physically see or touch. And listen, this isn't just a gut feeling. The numbers tell the exact same story. The number of public companies you can even invest in has been chopped in half since the 90s. That means the big indices we all track, like the S&P 500, are basically just a handful of big volatile tech companies. So your entire financial future could be hanging on the decisions made in just a few boardrooms in Silicon Valley. Talk about putting all your eggs in one basket.
Okay, so if that's the problem, what's the solution? How do we disconnect from that casino? Well, there is a way, and that brings us to the core idea for today, the hyper-local syndicate.
This right here is the big idea. I truly believe this is where the smart money is heading. People are realizing that real, durable wealth isn't just a number on a screen. It's a real-world business, a service that people in your actual community need and pay for day in and day out. It's about owning a piece of the economy on your own street.
And the tool that makes this all possible is called syndication. Now, I know, it sounds like a complicated, fancy finance word, but I promise you it's incredibly simple. All it means is teamwork. It's just a group of people, maybe friends, maybe neighbors, who pool their money together to buy something awesome that none of them could afford by themselves. The group is the syndicate, and the person who organizes it all is called the sponsor. That's it.
Now, why is this so powerful? Because it creates something I call the proximity premium. By teaming up with people you know to invest in your own backyard, you get instant advantages. You can suddenly afford better quality businesses. All the costs and the work get shared. Your risk is spread out. And here's the most important part. Your wealth is now geographically protected. It's anchored to your town, not to the mood swings of the global market.
Okay, so the concept is powerful. You get it. But you're probably thinking, all right, this sounds great, but how does this actually work? Like, what are the nuts and bolts? So let's get into the playbook. First things first, you need a legal structure to hold the investment. The most common one is an LLC, a limited liability company. Just think of this like a normal business. Your voting power is based on how much money you put in. Then you've got a cooperative, which is totally different. It's pure democracy. One person, one vote, period. It's less about pure profit and more about serving the members. And finally, there's an investment club, which is also democratic, but usually requires everyone to be really hands-on and vote on all the big decisions.
And the deal itself almost always follows these 4 simple stages. Step 1, the lead. This is that sponsor we talked about. They're the one who finds the great deal and does all the homework on it. Step 2, the pool. This is where you and the other investors all put your money together. Step 3, the structure. You officially form that LLC or whatever you chose to actually buy the business. And step 4, the best part, the payout. The business runs, makes money, and those profits get paid out directly to you and the other owners. Simple as that.
So, what kind of super exciting, high-growth businesses are we talking about here? Well, the answer might actually make you laugh. Because in this world, boring is the new rich.
Just take a look at this number for a second. $8,000 a month. That is the real-world cash flow that one investment group is making from a single, boring laundromat they bought together. This isn't imaginary, hope it goes up tech money. This is predictable, spendable income from a service people in their town will always, always need.
So, you're probably asking, where does an opportunity like that even come from? Well, here is the secret. So many of these small local businesses are owned by people who are getting close to retirement. They've been running it the same way for 30 years. They haven't updated a thing. This creates this massive opening for new, energetic owners to come in, make a few simple tweaks like adding credit card readers, and just dramatically increase the profits. Yeah, we are talking about the backbone of your town. The laundromat, the car wash, the self-storage place down the road. These businesses aren't glamorous. You're not going to see them on the cover of Forbes, but they are essential. They produce consistent cash, whether the stock market is up or down. They are real assets serving real people.
Okay, I know what you might be thinking right now. This all sounds amazing, but isn't this kind of thing only for super wealthy, connected people? And you know what? For the longest time, the answer was yes. But not anymore. The rules have completely changed.
I want you to meet your new best friend, regulation crowdfunding, or Reg CF. This came out of something called the Jobs Act back in 2012, and it was a total game changer. It basically created the legal green light for regular, everyday people, not just millionaires, to invest in private businesses and deals just like these.
And this slide right here says it all. The old way was an exclusive club. You had to be an accredited investor, which is just a fancy way of saying you already had to be rich. There was a bouncer at the door. But the new way, thanks to Reg CF, is open to everyone. You, me, any retail investor. The bouncer's gone. The doors are open.
And that's the most important takeaway here. The
the velvet rope that kept 99% of people away from these kinds of real wealth building opportunities has been cut. This isn't some secret club anymore. You now have a formal legal invitation to stop being just a customer and start being an owner.
Okay, so we've covered the what, the why, and the how, but none of that matters without the most important part. What do you do now? How do you turn all this information into action? What is your first step? Here is a simple 4-step action plan you can literally start today. First, just identify. Just open your eyes. The next time you're driving around your town, look for that one boring business that looks a little run down, a little neglected. Second, start the conversation. Just talk about the idea with your friends, your family, your neighbors. See who gets excited. Third, learn together. Hop on Google and just do some basic research on those structures we talked about. And fourth, find your lead. You need someone to run the thing. Maybe you know an expert operator, or hey, maybe you could offer to work at a car wash for free on weekends to learn the ropes and become that expert yourself.
So I'm going to leave you with this question. Just for a minute, forget about the stock market tickers and the crypto charts. Just look around your own neighborhood. What boring business do you see every day that is just waiting for someone to come along and turn it into a hidden gold mine? I would love to hear your ideas. Drop them in the comments below.
Wow, that was something, right? But don't go anywhere, there's more coming, and it's gonna make you think in a whole new way. Quick reminder, if you like learning cool stuff without the fluff, subscribe now. You won't regret it.
Hey, welcome back to the Violet Vault. So glad you're here. You know, we spend a lot of time talking about the usual stuff, right? Stocks, bonds, ETFs, the whole shebang. But what if I told you there's a whole other world of investing out there? An entire class of assets that literally could not care less about what the Federal Reserve is up to or what the talking heads on TV are shouting about. What if its value was tied to something, well, something way more predictable? Time itself. It almost sounds like something out of a movie, but I promise you it's very, very real. And today we are going to peek behind the curtain at a concept I call the maturation vault. I think we've all felt this, haven't we? That feeling. You wake up, you pour a cup of coffee, you open up your brokerage app, and your stomach just does this little flip while the page loads. And then, a sea of red. It's just exhausting, right? It makes you feel like you're strapped into a roller coaster that's being driven by a total maniac. And after a while, you just have to ask yourself, is this really the only way to do it? Is there a calmer path to building wealth?
Well, that's exactly what we're searching for today. We are on the hunt for stability in a world that feels pretty chaotic. We're looking for those rare assets that march to the beat of their own drum, especially when the rest of the market is, throwing a full-blown tantrum. It's all about finding a different kind of path. Acquire one maybe, but one that could lead to an even better destination.
All right, let's hop in a time machine for a second and go back to 2008. I mean, what a mess, right? The news was terrifying, banks were collapsing, and the stock market felt like it was just falling off a cliff. The S&P 500 got absolutely crushed. I mean, it was cut in half. People lost their life savings. It was just brutal. But look at this. While all that chaos was unfolding, something really interesting was happening in a totally different corner of the world. The market for fine wine. It barely even noticed. A tiny little 10% dip, and then it just bounced right back. Now, that's not just luck. That points to something fundamentally different about where these assets get their value.
So it just makes you wonder, what if you could just step off that crazy roller coaster entirely? Just imagine an investment where you didn't have to sweat the latest inflation report or worry about what's happening halfway across the world. An asset whose value is tied to something as simple, as steady, as predictable as the pages turning on a calendar. That's kind of the dream, isn't it? A truly set it and forget it investment where your only job is to just be patient.
And that dream, well, that brings us right to the main event today. This idea that I like to call the maturation vault. It's all about investing in things that literally get better, more sought after, and more valuable simply with age.
So what are we actually talking about here? We're talking about real, physical things. Stuff you can actually touch. Picture a huge, heavy oak barrel of Kentucky bourbon, just sitting in a quiet warehouse, or a dusty case of incredible wine, tucked away in a cool, dark cellar. As these things are just sitting there, something amazing happens. It's this natural chemical magic that makes them better, rarer, and ultimately way more valuable.
Yeah, this picture right here just says it all. Inside every single one of these barrels, there's this slow, quiet transformation going on. The raw spirit is seeping into the wood, pulling out these incredible flavors of caramel and spice and vanilla, getting smoother, richer, more complex. It's not just sitting there, it's evolving. Nature is basically your silent business partner, working for you 24/7 to turn a simple liquid into a luxury good. I love this phrase. The best way to think about this is that you're earning a biological interest rate. I mean, think about it. For a stock to go up, you need a CEO, a marketing team, thousands of employees all working like crazy. For a bond to be safe, you need a huge company or a government to not go bankrupt. But these assets, they literally create value just by existing. The steady tick-tock of the clock is what's driving your returns. How cool is that?
Okay, so that's the big idea. And it sounds great, right? Almost a little poetic. But how does this actually work? How does a barrel of whiskey aging in Kentucky actually translate into money in your pocket? Let's get into the nitty-gritty, because this is where it gets really, really interesting.
It all starts right here. When whiskey first comes off the still, it's pretty much moonshine. It's called new make spirit, and trust me, you do not want to drink it. It's clear, it's harsh, it's got a real kick. And because of that, it's dirt cheap. We're talking less than $10 for the amount of liquid that would go into a normal bottle. So this is our starting point. This is the raw material.
Okay, now let's hit the fast forward button. Let's let 20, maybe 30 years go by. That exact same liquid, after sleeping in that oak cask for a few decades, it's a completely different animal. It is transformed into this ultra-premium, top-shelf luxury spirit that collectors all over the world are dying to get their hands on. And a single bottle can now be worth over $10,000. Just let that sink in for a second. From under $10 to over $10,000. And the only major ingredient that was added was time.
So you might be thinking, okay, that's amazing, but how in the world do I get in on that? I don't own a distillery in Kentucky. Well, it all works because of this really brilliant win-win system. See, distilleries have this one massive problem. They have to pay for buildings and equipment and employees today to make a product they might not be able to sell for 20 years. That's a serious cash flow problem. So, to solve it, they sell some of their brand new, young barrels to investors. They get the cash they need to operate, and you get to own an asset that is literally built to grow in value over time. It's just a beautiful partnership.
And when you look at the historical returns, they really speak for themselves. Now, of course, we always got to say it, past performance is never a guarantee of future results. But when you look at the historical data, while the S&P 500 has been a great investment, averaging around 7 to 10% a year, these whiskey casks have seen returns closer to 12 to 15%. Now, that might not sound like a huge difference at first, but believe me, over 20 or 30 years, with the magic of compounding, that gap can be absolutely life-changing. It's the premium you get for your patience.
And you know, one of the things I really love about this is just how secure it feels. This isn't just a line of code on a server somewhere or a ticker symbol on a screen. No, your barrels are physically stored in these incredibly secure, government-bonded warehouses. Ownership is tracked with ironclad rules both here in the US and over in Scotland. And at the end of the day, you own a real thing. The actual liquid in that barrel is yours, that tangibility. That provides a kind of peace of mind that's pretty hard to come by in our digital world.
Okay, but it is so important that we talk about the other side of this. Let's have some real talk for a minute. This is not some magical, risk-free investment. Nothing is. This strategy requires a serious amount of patience, and that patience comes with its own challenges and risks that you absolutely have to understand before you even think about jumping in.
The number one thing you have to wrap your head around is liquidity, or more accurately, the lack of it. A maturing asset like this is what we call illiquid. Think of it like this. Selling a share of stock is like going to an ATM. You can get your cash in seconds. Selling a cask of whiskey is more like selling a house. It takes time. You have to find the right buyer. You have to negotiate a price. You have to do the paperwork. You can't just snap your fingers and turn it into cash. Which means this is not, I repeat, not money you might need for an emergency. So here's your homework. This is the checklist you have to go through. First, you have to be truly ready for a long-term commitment. We're talking years, maybe even a decade or two. You have to be okay with that liquidity risk we just discussed. And I would strongly suggest you work with a reputable expert who can guide you and help you avoid rookie mistakes, like paying too much for a cask. And don't forget, you've got a budget for those small, ongoing costs, like storage and insurance. And maybe most important of all, authentication is everything. You have to know what you're buying is the real deal.
Let me be as clear as I can possibly be about this. This is the absolute opposite of a get-rich-quick scheme. This is a get-wealthy-slowly strategy. It's for the tortoise in the race, not the hare. The entire foundation of this is built on the profound and I think really rare wisdom of patience.
And that brings us full circle, right back to this really powerful idea we started with. When you invest this way, you're not really betting on a company or the economy. In a very real sense, you are investing in the calendar itself. You're making a bet that tomorrow will follow today, and that next year will follow this one.
This quote really just says it all, doesn't it? Whiskey is transformed into a more valuable asset each year it is allowed to age inside a cask. It's so simple but so profound. Every year that passes isn't just a year you have to wait. It's a year that nature has been your partner, actively working for you to create something more refined, more desirable, and more valuable than it was the year before.
So I want to leave you with this one last thought to chew on. We live in a world that screams for now. Instant results, instant gratification, everything faster, faster, faster. But what if your single greatest advantage as an investor, your true secret weapon, is simply your ability and your discipline to just wait? What do you think? I'd love to hear your thoughts on this down in the comments. Is this something you'd ever consider? And hey, if you got some value out of our chat today, do me a solid and tap that like button. It really does help the channel out. Thanks so much for hanging out with me today, and I'll see you in the next one.
Thank you for spending time with us here at the Violet Vault. Don't forget to like, subscribe, and drop your thoughts in the comments below. I'd love to hear from you. Until next time, stay focused and keep growing.